let me introduce to you Ash and his team, which includes David and Nishant. They're all Vanderbilt students, and their business is Camelot. Ash, you can take it away.
Sounds good. Hey, my name is Ash, and I'm here to show you how Camelot, our company, which is a long-only value-oriented hedge fund, helps our investors build better, happier, and more worry-free lives. So to start off, let's just introduce ourselves and our team. David and Nishant are here too. So I oversee our strategy and day-to-day operations at the company, and also oversee our technology and financials investments. Before launching Camelot, I launched a company which managed logistics for remote employees, for companies with remote employees in Houston, in order to manage reimbursement, travel logging, etc. And I also developed a system which connected rescues with private rescuers during Hurricane Harvey, essentially an Uber for rescue. And this was profiled in the ABC News, stuff like that. So we have a strong track record of technology and business. And finally, alongside David, I sit on a committee which oversees a portion of the Vanderbilt University endowment through the investment club, where we both serve as senior analysts. And like the rest of my team, I'm a member of the Vanderbilt class of 2023. So I'll let David and Nishant introduce themselves briefly as well.
Yeah, sure. I'll go next quickly. Just thanks again, guys, for taking the time. Really excited to be here. Just a little bit about myself, as the slide says, I'm the financial officer. So that means, managing our current portfolio, managing our investors, how those transfers, wires, withdrawals work, all of that stuff. I also do have a background in startups, running a healthcare startup out of the MIT Martin Trust Center for Entrepreneurship. So that was a Braille reader that converted Braille to audio. We work with the Perkins School for Blind, got a provisional patent for that. So that was a really cool opportunity. I do have a finance background too, hopefully, right? Which is where I did private equity and real estate investments over the past couple of years at the corporate role. And yeah, that's pretty much it. I'll pass it to Nishant now.
Thanks, David. And again, just echoing the sentiments again, thank you all for being here. My name is Nishant Jain, and I'm the Chief Marketing Officer of Camelot, and I also oversee a portion of our technology investments. And at Camelot, I am our tech lead for our trading algorithms and our screeners, which we'll go into a little bit more into detail further into our presentation. Before that, I was a co-founder of a startup called TechEd, which was really focused on teaching high schoolers and college students practical programming. And before that, I got a little bit of my finance background at Arthur J. Gallagher as a consulting intern. And on campus, I'm involved in various clubs and activities. One is Vandy Apps, which is really sort of a tech club oriented towards new inventions on campus. So we'd love to share what we have done here. So move on.
Sure. So like I was mentioning earlier, our goal is to help you build a better, happier, and more worry-free life. And the way we accomplish this is effectively managing your and our other investors' money from day one. Now, as I'm sure you guys are familiar with, investing consistently from day one and having a long-term investment horizon means you can grow the funds you have today into what you need for financial freedom in the long term. For example, as we've written here, just $50,000 invested today at our target annual rate of return net of fees at 20% grows to over $10 million. And of course, extrapolating that to about $5,000, that grows to over $1 million in 30 years. And this means that consistently investing through our fund and consistently having a long-term outlook in the investment space allows our investors to build the lives they need and the lives they want. So a little bit about our journey. So we started in January of 2020, and the fund really came out of our past investment experience, both managing a portion of the university endowment, as well as managing personal funds over the last couple of years, where we'd averaged a 29% annual return. So at this point, last January, we decided that we really want to take this experience that we've developed and apply that to bring the same returns to our peers on campus and launch a company around that. And while there was definitely a lot of unproven ground, we really decided that this was something that we could do based on our experience and based on our commitment to really go and build something important and something that can build value for the people around us and help them build their best lives. So we launched and began fundraising in January. And it started as probably one of the most rigorous tasks we've ever done. We took over 100 meetings in order to raise our first fund. And this ranged from everybody from students that we could find, alumni we could find, etc. And ultimately, starting with the first $1,000 deposit from my roommate, we grew this to the first fundraising round of $50,000, where we were able to take that money and hold it into our brokerage account. But at the same time, our algorithms were showing that the market was overvalued, and we decided to wait out the markets, expecting a dip in the first quarter earnings season. And of course, this is exactly what happened. We were extremely fortuitous in our timing, but also our algorithms are pretty accurate in their predictions. So we were able to buy into the coronavirus dip, essentially into a series of companies that we thought would emerge from the pandemic stronger than ever before. And these holdings now form the core of our portfolio, and we've consistently expanded since then, both in terms of our learning and our education in the field, because we know that to succeed in the markets, you always have to be growing and always learning as much as possible. And this has meant reaching out to as many fund managers as we can find in order to learn about their strategies and risk management frameworks. For example, we reached out to a local hedge fund manager in Nashville who helped us develop our risk management strategy, including exposure to different investment styles, time horizons, and how to hedge our risk and stuff like that. So we've always been focused on growing intellectually, but then also growing the company. We're now approaching $150,000 in assets under management through additional deposits, as well as performance of our initial fundraising. So we've returned 34% net of fees in 2020, which is more than double the S&P 500's performance. And now that we've covered a little bit about how we got here and kind of where our journey has taken us, let's jump into the strategy a little bit, and David will take it from here.
Yeah, sure. Thanks, Ash. Yeah, so just quickly a little bit about our strategy and how we think about things when we make an investment. So I like to say, how do we go from ideation to execution, right? So how do we have a thought about something in the market to how does that trade get executed on a large scale across our brokerage platform? So the first thing, as Ash mentioned too, we've invested significant time into building out algorithms. Nishant can talk a little bit more down the line about the actual technical indicators that we use for that, but we do a mix of looking at historical indicators, historical performance, and then future growth rate. And that kind of gives us a funnel of companies, a specific investment universe to look at. And then from there, we'll go through and pick them out individually and handpick the ones that we like. And then from there, do a more rigorous financial, like a DCF, for example, or do a comp, or look at growth prospects and stuff like that. And then this is all individually. And then we'll come together as a group and then kind of just discuss for a couple hours and hash out what we like, what we don't like, what the management team looks like, earnings, all sorts of stuff like that. So then as a group, we agree on principle to actually buy the company. So now it becomes a matter not necessarily of if, but when. So when do we think is the optimal time, right? Just because there are inherent short-term fluctuations in the market. So then we do an additional technical analysis looking at market momentum, specific chart-based indicators that we use. And then once we determine that optimal entry point, we're able to buy, and then we execute that trade on behalf of all of our clients. And then obviously the work is not done until after we've made the investment. So we continue to monitor just to minimize risk. Sorry, can you not hear me?
No, you have a 3-minute warning, sorry.
Oh, yeah. No, thank you. And maximize growth.
Perfect. So we have a ton of competitive advantages, especially deriving from our youth, and I'll let Nishant touch on those briefly.
Thanks, Ash. Yeah, so speaking to our competitive advantages, I think it's really important, first of all, to note our age, and especially note that as younger investors and as younger managers, there's definitely a bit of scrutiny that comes into us, and we've definitely been asked tons of times, why are you guys qualified? And we definitely think this is a great question and a valid one, but we would note that as members of Generation Z, we believe that we're very uniquely positioned to anticipate future trends in technology as well as in society as a whole. And just a few numbers to kind of account for this. Gen Z already accounts for over 40% of all consumer spending just in 2020. And we know that they have a spending power of over $140 billion. And we believe as a fund and as a team in college, especially a team that's more technically oriented with economics and computer science students, as we all are, we believe that we're uniquely positioned to take advantage of the trends that we're seeing in technology, especially through our investments that we will go into momentarily. Another thing that we really do in our fund is we prioritize education and inclusivity for all of our investors. And this takes the form of radical transparency. We send monthly newsletters that are usually 12 to 15 pages that really highlight all of our decisions and our market outlook to really help our investors become a part of the process and learn about what's happening behind the scenes. So Ash, if you want to go to the next slide, we can talk about more.
Sure. Yeah, so we returned 34% net of fees last year, as we mentioned earlier, which is more than double the S&P's performance, owing both to our prescient decision to kind of wait out the markets in January through March, and then also just outperforming the markets in the long term from there. So our holdings include some prominent tech names as well as financial names. We can go into this a little bit more during the Q&A section because we have a pretty in-depth explanation of kind of our investment process and the case studies behind our investments, but we can definitely explore these a little bit more. We've returned about 80% on a per square investment, for example, and recently invested in Activision as well. So to kind of summarize everything we've discussed, between us, we have a great deal of experience, and at the same time, we've been really committed to learning as much as possible. And we've been consistently beating the market, 29% annual returns in the 2 years preceding 2020, and then 34% net of fees in 2020. We're really committed to leaving a legacy, which is of improving people's lives. And we're working hard to do this. And we'd love to have you join us on our journey. And that's Camelot. Thank you so much.
Thank you, guys. So I will start the 10 minutes Q&A, hand it over to the judges. You can either raise hand or fight over it, whichever one you want.
How are you leveraging the Gen Z competitive advantage in your investments that you're making specifically?
Yeah, we'd love to show you that. And Activision is a perfect example. So Nishant, I know this is one of your coverage companies. If you want to discuss that briefly, we'd love to hear a little bit more.
Yeah, for sure. So I think Activision is a good example, but even, so I'll start with Activision, then it'll lead me to my other part of the answer, which I think will sort of be more focused on the algorithm side. But this is a really good example of why we believe that as a fund and as a team, our vision goes farther than just what investment might be a good one. I think we, as a fund, really prioritize investing in trends. And I think Activision has really shown this to us. This is just a company that we thought earlier this year that video games, especially those on mobile devices, really outperformed during the pandemic and during this fiscal year period. We noted that a lot of our all of our friends and a lot of younger students, period, were spending more time and allocating more money towards their video games, and especially those, as I said before, on their phones. So we saw that this company really had a strong foothold and a very strong leadership position in this industry. And I think this is more of a case study that shows that, like, this is more of our investment that has successfully translated into our thesis. But I think speaking to the Gen Z, speaking more to your question, I think that our ability to take advantage of different things in the market, such as, for example, I'm sure you've all heard of Wall Street Bets recently. Our algorithms, we have specific screeners and algorithms that track the online community for if there's a good opportunity to buy certain stocks that fit in with our overall thesis. And I think that just helps provide some insight to you as to our team being at the foothold of innovation in terms of our algorithms. So I can go into more detail about that, but I hope that answered your question.
So is your algorithm proprietary to Camelot? First question. And then second question, as you look forward to growing the business, where do you see yourself positioning yourself in the market as the reason to invest in Camelot versus obviously there are a lot of other investment vehicles available for people. So is there a specific market you're targeting, i.e. Gen Z, or what's the hook there?
Sure. So just to kind of answer where growth is looking like, and kind of on that note. So you're absolutely right in the sense that so far, a lot of our investors have consisted of younger people. But at the same time, we feel that we can occupy a very meaningful market niche where we essentially connect older, more established and institutional investors with a younger perspective, and with our proprietary algorithms, with our proprietary insight, bring kind of a new approach to the investment space. And like we were talking about with Activision, where being able to see our peers spend more time on the company's products and having that firsthand insight, and then applying that insight to generate an investment thesis, which has proved to be a very profitable one, especially during the pandemic, which, like I mentioned, we were seeing. We really bring that opportunity to all sorts of investors, whether that's an institutional investor or somebody our own age. So the niche that we would really occupy in the market is a high return, low risk, equities focused investment strategy. So our target rate of return, like we've mentioned earlier, is 20% net of fees, and we've been able to meet that consistently. So basically, this is a kind of investment opportunity with a risk profile that would kind of be middle of the market, and then a return profile which is also above market, obviously. So we're pretty wide in terms of our investment appeal.
Ash, I'm going to direct this question to you. I'm apt to believe that you guys bring a bit of a perspective advantage, as you described, being Generation Z and coming at this
Sure.
market analysis from a younger perspective. But have you given any thought as a leadership team to the potential blind spot that creates in terms of the vast majority of the capital being invested on Wall Street is being invested by generations that are much older than you, may not share that perspective, and thereby creating a bit of a gap?
Yeah, no, that's a very good point. And I think that kind of speaks to something that we've been very kind of focused on, which is learning not only from our own perspectives, but also learning from those who are more established. And that's involved reaching out to hedge funds in their local area, reaching out to hedge funds on Wall Street, and garnering their perspectives as well. Because you're absolutely right, there's a lot of companies with established business models and consistent cash flows, which are going to succeed in the long term and prove to be great businesses to invest in, even if they aren't flashy kind of youthful businesses. And we've been very keen on learning from the people around us to grow our market knowledge. And of course, I want to mention too that our algorithms are kind of agnostic to the company's kind of flashiness. They essentially look at the financial metrics. So we look at all sorts of companies. For example, Pershing Square is an established financial holding company with stakes in companies like Agilent, which manufactures precision optics, which is a pretty stable business, but not necessarily one that would be immediately emergent to the youthful audience. So we've been pretty diverse in terms of our appeal, but I would say that the insight edge that we have is more of an advantage on top of the broader and more general investment principles, as opposed to creating a blind spot and replacing them. It's on top of, not in place of, if that makes sense.
It does.
And John, did you have a question? I just want to make sure we get that in.
Yeah, also kind of, I guess, piggybacking off the kind of last couple of comments, you don't have to delve too much into it, but I was curious what % of your portfolio actually is invested in investments that you would say are Gen Z specific? Because when I saw the list, I saw Activision and thought, okay, that one. But then the others, it looked pretty familiar to me as kind of what old people invest in as well. But it was just flashed up on the screen, so I'm not totally sure.
Yeah,
I'll take offense to that, John.
Let me show you. I'm sorry. You're cutting out. That might just be on my end. But this is our holding profile. So we
What would
can
you
kind of.
categorize as Gen Z unique value prop specific?
Sure. So I think Chewy was a good example of that, because we had a lot of younger people who were seeing kind of spend, like we were saying, spend more time at home, and kind of needing to have food products for that, needing to have care products for that. And the younger demographic was especially prominent in Chewy's customer base, because these are people who have more time on their hands. For example, they're in school, so they're in college and have a little bit more time, as compared to somebody who's working, let's say, 100 hours a week on Wall Street, something like that. So this was kind of a demographic which was creating more demand for Chewy's products. And Activision, as we spoke to earlier, was a company where we were seeing our peers spend more and more time on their gaming products, because the pandemic kind of caused the end of more conventional, I guess, social outlets. And this meant that people were spending more time gaming and making in-app purchases, especially as stimulus checks came in. And we were seeing this firsthand, and we were very, very optimistic about how that would play into our investment thesis when we analyzed the financials of the company and did our kind of more rigorous financial analysis. We found it to be an excellent investment opportunity, which bode favorably with our kind of firsthand perspective. And of course, it's been a fantastic holding since then. So,
Drew, just 30-second warning for everybody here.
Quick question. I'd love to hear a non-financial related business challenge that you've addressed with your entrepreneurial mindset.
Sure. So I guess one thing is just maintaining customer relations and being able to really spend the time that our customers want, because I think we touched on this earlier, and I want to elaborate and emphasize that we see Camelot not just as something that helps build better lives through our returns, but also through the education that we offer. Because we know that to be successful in the financial world, we don't want you just being dependent on us. We want you to have a knowledge of the world around you, and have knowledge of how to invest and manage your money. And so making sure that our investors get out of the company what we want them to has included spending a great amount of time on newsletters, spending a great amount of time even on weekly conference calls, which we arrange with all our investors, whoever wants to join, in order to kind of talk about market developments, talk about kind of what their capital allocation should be looking like how much should they be saving, how much should they be investing, and then what kind of the basic principles of investing are, and how the market movements, for example, the Federal Reserve's decisions, stuff like that, impacts investment performance. So maintaining that kind of emphasis on customer growth from the company. So not just financial growth, but also learning growth and overall holistic growth for each of our investors has been something very important for us, and something that we spend a lot of time on. And it's required a great deal of effort, but it's been something super important.
Perfect. Thanks, Ash. Ash, Nishant, David, thank you very much.
Thank you.
Thank you.